world obsessed with speed, fast trades, breaking news, and overnight success stories, it's easy to think investing is like a race. But what if the real edge lies in slowing down? At holisticinvestment.in, we have seen it firsthand. The investors who pause to think, ask the right questions, and stay focused on long term goals and often outperform the ones chasing the next big thing. And that's exactly why the most important thing by Howard Marks is such a powerful read, because it's not just about what you invest in, it's about how you think about investing. So, in today's video, we are diving deep into the key insights from the book and how they apply to your financial journey. So let us begin. Hi there, welcome back to holisticinvestment.in, where we simplify the world of personal finance for individual investors like you. So have you ever wondered why two investors can look at the same stock and reach completely different conclusions? Howard Marks explains this with this concept of second level thinking. First level thinking is surface level. This is a good company, so the stock must be a good buy. But second level thinking digs deeper. If everyone thinks this is a good company, is it already overpriced? This kind of critical analysis is what separates exceptional investors from average ones. At Holistic Investment, we often challenge our clients to go beyond the obvious, not because it's easy, but because it's essential. So ask yourself, am I thinking deeply enough or just going with the flow? So most people assume high returns mean high risk and vice versa. But that's a dangerous oversimplification. Marx defines risk as a potential for permanent capital loss, not just short-term volatility. Sure, volatility feels uncomfortable, but true risk is losing money that you can't get back. So here's a question we often ask our clients. Would you be okay if your portfolio dropped 30% next year, even if it recovered later? So if the answer is no, your risk exposure may be too high. The key isn't to avoid risk, it's to understand it, measure it, and manage it wisely. It's tempting to think we can time the market, buy low, sell high, and get out just in time. But as Marx points out, even seasoned pros can't predict tops and bottoms consistently. So instead of trying to time the market, focus on understanding where we are in the market cycle. So ask yourself, are people acting greedy or fearful? Is the market overheated or being ignored? At Holistic Investment, we use this thinking not to predict but to prepare. Because a calm investor who stays ready often beats the one who tries to be clever. Here's a common mistake: buying great companies at bad prices. Think of it this way. A high quality blazer is valuable, but would you pay 10 times its worth? The same applies to stocks and mutual funds. Even the best investments can disappoint if bought at the wrong price. Mark reminds us, price is what you pay, value is what you get. When we review portfolios, we often find popular high cost funds that don't justify their expense. That's why valuation discipline is so important, because investing without checking the price is like shopping without checking the bill. Here's something ironic. Markets are often most dangerous when they feel safe first. When everyone's bullish, risk tends to get ignored. Investors pile into the same stocks or sectors believing momentum will protect them. But as Marx say, the best opportunities lies where others aren't looking, and the greatest risk are often where everyone is already crowded in. So discomfort in investing can be a sign you're doing something right. That's why we remind our clients, if everyone agrees with your investment decision, you might be too late. When things feel too easy, be cautious. So what is the final takeaway? At its core, investing isn't a contest of who acts fastest. It's a process of sound judgment, emotional control, and rational decision making. That's why Howard Marks' book resonates so deeply. Because in the end, it's not about predicting the future, it's about preparing for multiple futures. And if you're wondering how these insights translate to your portfolio, This is where a certified financial planner can help. A good CFP doesn't just recommend products, they guide your thinking, challenge your assumptions, and build a strategy rooted in logic. Because long term wealth isn't built by reacting to markets, it's built by responding with clarity and confidence. So, if this video gave you a fresh perspective on investing, go ahead and like, share, and subscribe to our YouTube channel. And if you got any questions about your own portfolio or financial goals, click the link in the description to schedule a free consultation with one of our certified financial planner from our team at holisticinvestment.in. So let's turn timeless principles into smart action starting today. Thanks for watching, and we will see you in the next video.
Can definitely check out the blog post we have posted on our website through the link in the description. And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to our YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.